Hey everyone, Daryl here. In this video, I'm going to go over Disney stock, and it's going to be an update video from my January 16th posting, and I'll go over a lot of the theory, the market structure, pretty much why I was able to directionally pinpoint where exactly Disney was going at the time. Remember, at the time of I posted the video, it was January 16th, which would lead the stock rightly up here. I called for a retrace back into here, ultimately to fresh highs. Let's go over the breakdown of the stock, and I want to use this as a teaching lesson for everyone here. So let's go rewind back, right? Let's take a look at the overall stock. Remember, this is a capitulated stock that had made fresh 52-week lows off of a inverse head and shoulders pattern into a wave 3, into a corrective pattern at wave 4 to wave 5. I'll break that down even further and slower for you guys to understand. So overall, we were trading along this major falling wedge. Off of that falling wedge, we had a breakout, right? So inside of this falling wedge, it formulated an inverse head and shoulders. This being one of the shoulders, this being the head, this being another shoulder. Off of a breakout, off of a major area of demand into a wedge here. Using Elliott wave theory, this would be wave 1, your impulse wave 1, your wave 2. This would be wave 3. Remember, wave 3 always being the largest of the waves, and ultimately into a corrective wave 4. And around this area, this would have been for an impulse wave 5, which is where you guys would have been able to take profit at. So how did I formulate this line? How did I create this wave 5, and how was I able to directionally pinpoint where exactly Disney was going to head around that time? Let's erase this. I simply, using wave 1 and wave 5 are usually about the same size. Like I said, I'm a more conservative side. It may be a little bit bigger, but we're always going to shoot down below so we can take profits as conservative as possible. So I'm going to clone this. As you can see off of a retrace here, you can see that it aligns perfectly with a full retracement at 96.14 back over here. What profit would that have led you? From support around here all the way here would net you roughly around an 8% gain. Of course, it went higher. If you check over here, back over here to here is over a 30% gain off of an excellent earnings report, but no one really could have pinpointed exactly that. The safest profit take would have been that wave 5 up to a full retracement at 96.14, this indicating a wave 5 pattern. We're now sitting on an area of major supply, so I wouldn't be long in this position, but I wanted to use this video so that you guys can understand more about how I analyze the market. Once again, I take an overall view of a stock. I'm looking at a capitulated stock here. I'm seeing an area of major trend lines. I started my trend line at this very top here, connected as much points as possible here, and down, lower trend line right over here. We created a falling wedge. Inside the falling wedge, it formed an inverse head and shoulders, had a breakout inside an area of major demand. Inside of this wedge, we had an inverse head and shoulders as well. This inverse head and shoulders would indicate an impulse wave 1. Remember, this is a fresh 52-week low. Off of that, had a strong impulse move 1, corrective wave 2, which would be your other shoulder. Wave 3 being the longest of the waves. Wave 4, and ultimately wave 5. All right, guys, if you guys have any questions, leave a question down in the comment section below, and I'll be there to answer all of your questions and go over a little bit more to whatever you guys need. Happy trading, guys.